Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. A little bit of a quiet day in the currencies. However, this morning, CPI data did come in line with expectations. The dollar index was higher ahead of this number, and it weakened shortly after. The number wasn't bad, but yesterday's PPI read, which is not watched as closely as CPI, that came in as the strongest number since November 2011. So you're seeing the dollar strengthen into core CPI, which is what we're watching most closely. And again, that year over year and month over month was in line with expectations, but there was some belief that you'd see it beat, and traders were ready speculating with the stronger dollar. So the dollar fell back just a bit as the morning developed. You also had the ECB minutes from that June meeting when the euro tanked on June 14th. Those ECB minutes, they pointed to what you'd expect. They were ultimately dovish in their time frame of hiking rates. They did tighten that time frame up over recent weeks, pointing to September 2019 being on the table. However, the overall mood with the board there and officials was that quarter two growth is going to slow due to trade tensions. So the euro consolidating ultimately on the session. You're seeing the dollar index do the same thing. Again, more quiet. Fed President Harker out of Philadelphia, he talked today saying that he is open to that fourth hike if inflation picks up. Now the dollar index, it bottomed around the time he had spoke, around 11 a.m. Central Time, and it's worked itself higher. Ultimately, it's a range-bound trade on the day, but he did help lift it off session lows. Fed Chair Powell as well spoke this afternoon in an interview. Now he's talking about slower growth, potentially because of trade tensions, and you're also seeing higher prices, stronger inflation on that slower growth. That's stagflation. So you're starting to see a lot of these central bankers worry about the effects of trade, and we're not really seeing it yet in the data, but we will be, or potentially could be, this month or next month, and that's what everybody's starting to really talk about, and that's what we're going to keep our eye out for here as the data starts to come out through July and early part of August. Now moving on to the yen, this thing is falling apart. There was a major three-star support in trend line dating back to December 2015 that came in just below 90, about 89.70, 89.90, and that has gone down right through that, didn't even stop. It's breaking down now. There is some support we're tightening up right around 88.10 to about 88.50. Watch for that level to try and hold it. I mean, it's going to be oversold here at some point. You're going to see a bounce, but regaining that trend line and to close back above 90 is something that's going to be very difficult on a technical basis unless you see the equity market fall apart and then you get safe haven bid in the yen. Now, we've been talking about this yen for months now, or really, I guess, weeks, but more than a month. That 200-day moving average and major three-star resistance right around the 92 mark was a pivotal level for us. We could not get excited, no matter how long-term bearish we are in the dollar index or the dollar, we could not get excited about the Japanese yen until it closed above 92, and it continued to struggle to do that. We'll finish off with the commodity currencies. The Aussie dollar is showing some life today, as well as the Canadian dollar. The Aussie dollar did sell off going into yesterday's session as those trade fears were reinvigorated, but we're bouncing back. It traded higher and did not get down to major three-star support, just above 73. The low is around 73.50. It's moving back to the 74 mark, and we have a big read on Chinese trade balance tonight. This is going to move the market. It's going to move commodities. It's going to move the Aussie. So watch for this. It's also going to move the Canadian. The Canadian is consolidating today after trading lower. Crude got hit really hard yesterday, despite the fact that Bank of Canada raised rates yesterday on Wednesday. Yesterday, you did see the Canadian dollar fall out with the crude oil as other commodities, and the dollar strengthened. So the Canadian dollar got hit, but it is stabilizing. Watch for this to stabilize as crude has stabilized. So you can see some of these commodity currencies get the equity market finishing on session highs. If some of these commodity currencies get some momentum, there is value down here. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us, info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.